Voices have been growing for implementation of the Securitization and Reconstruction of Financial Assets and Enforcement of Securities Interest Act 2002, also known as the SARFAESI Act. Arguments for the Act contend that its implementation would enable business and entrepreneurship to grow. Some, however, are skeptical. So what is the SARFAESI Act? First passed by Parliament on December 17, 2002, the Act empowers banks and other financial institutions to directly auction residential or commercial properties that have been pledged with them to recover loans from borrowers. Before this Act took effect, financial institutions had to take recourse to civil suits in the courts to recover their dues, which is a lengthy and time-consuming process. As per the Act, if a borrower defaults on a loan financed by a bank against a collateral, then the bank gets sweeping powers to recover its dues from the borrower. After giving a notice period of 60 days, the lender can take possession of the pledged assets of the borrower, take over the management of such assets, appoint any person to manage them, or ask debtors of the borrowers to pay their dues too with respect to the asset. This recovery procedure saves banks and financial institutions a lot of time, which otherwise would be long drawn out due to the intervention of courts. Those calling for its operation in Nagaland say that the non-implementation of the Act has been detrimental to the overall economic growth of the state. According to them, it has restricted the flow of credit to the people. The Finance Department of the state has revealed that the credit deposit ratio of Nagaland was only 48.44%, against the national benchmark of 60% for the quarter ending June 2021. The credit deposit ratio of a bank is an indicator of how much a bank lends out. Banks have been reluctant to extend loans in the state in the absence of secured assets and an effective mechanism for quick recovery of dues in case of default in loan repayment. The department also informed that the banks have been requesting for implementation of the Act in the state to enable them to extend loans against secured assets. This, on paper, will create more credit flow for businesses and allow local entrepreneurs to finance their works. Now, while the flow of credit is important, some provisions of the Act have raised concerns. The Nagaland Bar Association, for instance, points out that the Act seems to be incompatible with Article 371A. The unique landholding system is one of the things that make Nagaland stand out. And these rights, guaranteed by Article 371A of the Indian Constitution, are fiercely protected by most people in the state. There is also concern about clauses in the Act which empowers banks and financial institutions to take possession of secured assets against default in repayment. The Act enables banks to recover dues faster without intervention of courts or tribunals, and even without approaching the Debts Recovery Tribunal by deploying Assets Reconstruction Companies or ARCs as their legal agents by entering into contract. Apart from infringement of the constitutional rights conferred by Article 371A, the NBA says that the Act would be highly disastrous to the members of the business community and entrepreneurs, as well as the legal heirs and dependents of deceased servicemen having unpaid money loans. There are also arguments that financial assistance for local businesses and entrepreneurs are available without them having to mortgage one's land or property. There is, for instance, the Credit Guarantee Fund Trust for micro and small enterprises. Under these credit guarantee schemes, one can avail loans up to Rs 1 crore without mortgaging any property or without having any grantor. This is available for both new applicants and those who are doing business. However, the Finance Department has informed that the feasibility of implementing the SARFAESI Act in harmony with the provisions of Article 371A and the Nagaland Land and Revenue Regulations Amendment Act 2002 is being explored by a select committee of the Nagaland Legislative Assembly. The Nagaland Chief Minister Neiphiu Rio himself told the Assembly session in February 2020 that the Act cannot be implemented in the state in its present form as it comes in direct conflict with the landholding systems and restrictions on the transfer of land as in Article 371A. He later informed that as a central act, the requisite amendment has to be carried out by the Union Government and the State Finance Department. The Chief Minister had urged the Central Department of Financial Services to modify the Act to restrict the transfer of property to indigenous inhabitants of Nagaland alone. A reply to this proposal is still awaited. The issue cropped up again this year on February 15th, when the Nagaland Legislative Assembly decided to refer the act to a select committee. And according to reports, the select committee on September 14th of this year has informed that it is planning to introduce the act in the next assembly session.